There's a lot going on. I've been at this since 2004, and I think this is kind of an unprecedented time in the rural broadband industry.
That was Lennie Blakeslee, Vice President of CoBank's Communications Banking Group, about the current state of the rural broadband funding environment. Hi, I'm Jeff Johnston, and welcome to the All Day Digital Podcast, where we talk to industry executives and thought leaders to get their perspective on a wide range of factors shaping the communications industry. This podcast is brought to you by CoBank's Knowledge Exchange Group. A staggering amount of money is being directed towards rural broadband from private sources, such as commercial banks and investors, and public sources at both federal and state levels. And while this is great as it relates to bridging the digital divide, it does pose challenges for operators as they navigate these various funding options. Lennie has been financing the rural communications industry for 2 decades, and his deep knowledge and experience makes him an ideal guest to understand the options and considerations operators need to be aware of. So, without any further ado, pitter patter, let's hear what Lennie has to say. Lennie Blakeslee, welcome to the podcast. It is an absolute pleasure to have you with us here today.
Thanks, Jeff. Great to be here.
Super excited to have you here today, Lennie. I think that you sit in a pretty unique seat in the ecosystem of rural broadband financing, be it public financing or private financing. I think you've got a really good perspective on what's kind of going on out there today. So I'm super excited to have you here today to talk about all of that. So maybe to start us off, perhaps you could just give us a very high level overview of what do you think the main or the core government financing programs that are out there for rural broadband?
Sure thing, Jeff. Happy to help. And there's a lot going on. I've been at this since 2004, and I think this is kind of an unprecedented time in the rural broadband industry, right? So, for instance, you have the legacy rate of return funding mechanisms. You have the recently completed enhanced ACAM offering period, where a little more than half the companies that received offers accepted those offers. You've got state grant programs that were born out of some of the ARPA funds that were available. And then probably the 500-pound gorilla that's waiting on the horizon is the BEAD program, which was $42.45 billion that's been directed toward rural broadband. That'll be distributed by state broadband offices, and a lot of the rule sets are currently being determined. So just a ton of stuff going on right now.
Yeah, wow, that is a lot to kind of process, a lot of different programs. How do rural operators attack this thing? Like, I would imagine if you do one, maybe you can't do the other. And, maybe one program is great for a certain area, and then maybe another one is better for a different area. It's great that there's all this money because we've got to bridge the digital divide. But how do you think, or what are you hearing or seeing, or what would be your recommendation for operators to kind of strategize and figure out what programs work best for them?
Yeah, it's a great question, and one that frankly operators are going through on a real-time basis right now, right? So fortunately, a lot of these companies have been in business for a very long time, and traditionally have done a great job of deploying services for the benefit of their customers. So that's the background they start from for the most part, which is fantastic. The other thing is that they have a lot of highly qualified, very professional industry consultants, and they can help make those analytical decisions about which program might be best. And then in terms of like how effective the deployment of these dollars might be, I think that's kind of the next level of question on that, right? I think for most current operators, the focus is going to be on stewardship of those dollars so that they can effectively bridge that digital divide versus just the deployment of funds for the sake of the deployment of funds.
The devil's always in the detail, I find, with these types of programs. And like you said, with Bead and others, I mean, there's some things that I believe are still kind of, getting worked out. But what are some of the risks you can think about, especially in the context of the environment right now? We've got a very tight labor market that's slowing down in some cases, I think, builds. We've got a permitting process in various states that seems to be a bottleneck in getting permits and getting stuff done. There's all sorts of other government programs that are fighting for permits and labor and things like that. And correct me if I'm wrong, but I think as these operators step up to these programs, they have to hit certain milestones in order to be in compliance with that program. So how do you think about all of that? What are you hearing about operators saying as it relates to all of that stuff?
Yeah, really, another really good question. So, and I'm going to step back a little bit to enhanced ACAM, right? In terms of inventory, labor, supply chain issues, that's been an ongoing problem. And it's exacerbated by the fact that all of these programs are happening at the same time while companies are racing in kind of a land grab mentality to deploy broadband, right? Enhanced ACAM is a great example because if you elected your enhanced ACAM offer, you have a pretty good idea on what your regulatory support will look like for the next 15 years, which is awesome, right? As bankers, we love predictable cash flows, so that's great. The offset to an enhanced ACAM is essentially that you have 5 years to complete the build for that entire program, which means companies are going to have to scramble for engineers to design those plants. They're going to have to scramble for contractors or their own labor to complete the projects. They're going to have to scramble for fiber, for cabinets, for pedestals. So all of those things get exacerbated in the current environment. And then as BEAD funds start to deploy, I think that probably gets even a little bit more congested.
So just real quick, Lenny. So I've got a enhanced ACAM, right? So it's you bid on an area or you claim an area for to build a network. You've got 5 years to build it, and once it's built, then is the support for the next 15 years sort of the is it the capital reimbursement? Is it the ongoing OPEX support? I'm just real quick. I'm just it's for listeners that may not be aware of that exact program.
Enhanced ACAM is designed to help operators build out their existing networks to specific speed requirements, right? So the support is designed based on what the anticipated cost is to deploy that network over a 15-year period, but they have to complete the build out requirements in 5 years. So it's a very compressed time frame. And once complete, then they know what the regulatory support mechanisms, those dollars will look like going forward. But it's going to be a challenge for a lot of folks to get those networks completed in that time frame.
So I get the challenge from a timing standpoint, given the tightness in the labor market and permitting, and I'm sure other things. So if we have continued rising costs that are unpredictable, like let's say, do you know if that plays a role in all of this? Is that a risk area that operators should be aware of as they sort of plan this thing out over a 5-year time horizon?
Absolutely one of the risks that companies have to consider, right? And we saw that happen on the rip and replace requirements that were to replace some non-US made gear in existing networks, where the program was designed to compensate at a certain level. And almost all companies who were eligible for those rip and replace funds estimated that their actual costs would be much higher. So you've got a real shortfall there from a funding perspective. And that's a potential risk on this side as well.
Yeah, no, that makes sense. Yeah, that makes sense. So let's kind of shift around here a little bit and talk about private capital in the context of all this. And I guess when I say private capital, I guess it could be well, it's commercial banks and and then infrastructure funds and private equity sponsors. I mean, as we talked about at the outset, I mean, there's just an unprecedented amount of money that's being allocated to rural broadband right now. So how should we think about just that, this massive influx of federal dollars, be it BEAD program or enhanced ACAM, and then on one side, and then the other side, you've got this, influx of private capital coming in. I mean, how does all that kind of work together? I don't have anything specific question, but just kind of high level. It just feels like there's just an awful lot of money going at this right now.
No, I think that's a really keen observation. And I think maybe a little bit of historical context helps that, right? So even on a pre-pandemic basis, you started to see an inflow of capital into the rural communications market. During the pandemic, when some traditional sponsor investment targets like public transportation, toll roads, airports, etc., were not doing as well, those investments were kind of suffering because no one was traveling, everyone was staying home. The inverse was true in the broadband market. The critical nature of broadband became readily apparent in a work from home and remote learning environment. And so you started to see an even greater inflow of private capital into the markets. And private equity sponsors, infrastructure funds realized that if they acquired what they call platform companies and then used those platform companies to push broadband out as quickly as possible, that they would increase revenues, they would increase EBITDA, and they would enhance the valuation of the assets that they acquired. So at the same time that was going on, you had existing operators pretty quickly recognize that, yeah, this is sort of a land grab environment that we exist in now. And so they also, where possible, have started to push fiber to the home and deploy fiber as quickly as they can. Both the current operators and the private equity sponsors, infrastructure funds, all those folks understand the role that all of this non-traditional capital can play in enhancing the ability to deploy broadband, which is why it's become such an interesting market that we're in currently.
And maybe just to be clear, but do investors look favorably upon companies that have programs in place, whether it's BEAD or enhanced ACAM? I mean, from an acquisition standpoint, is that an attractive thing to have or an asset to have as a company if you're looking to be acquired?
I think it is. We've seen that play out in several circumstances where, because there have been large regulatory support or non-traditional capital means available to push that broadband out as quickly as possible, increasing subscribers, increasing revenue, increasing EBITDA, enhancing valuations, it's definitely attractive.
I mean, we've seen a lot of activity, a lot of money, private money come into the market from investors. Do you think we've sort of hit a high watermark already? I mean, if you had to look in your crystal ball, over the next 5 years or so, do you see that same level of enthusiasm that we saw kind of post COVID, as you mentioned before? Those traditional infrastructure investments, be it roads and airports, maybe weren't as attractive as digital assets were, as everyone was working from home. I get all that. That makes a lot of sense. But over the next several years, do you see that increased level of interest from these investors, or would you expect that to kind of wane at all?
Yeah, I think the jury is very much still out on how that's going to play out. And ultimately, it will come down to the valuations or the multiples of EBITDA that companies are able to trade for. Well, and let me step back just a little bit. The downside is that because the growth expectations are so high, that labor, supply chain, inventory costs have stressed some of those business models slightly. Then the question becomes, will you realize the returns that you anticipated as quickly as you expected to get them? If that turns and people can make those very aggressive build out plans work, then yeah, odds are good that valuations will stay high and the market will stay engaged in the industry. On the other hand, if you see those stresses continue and some of these programs don't play out as planned, or if requirements for BEAD or state broadband office deployment mechanisms differ, that could put a little bit of downward pressure on valuations. So I think the jury's still out on what exactly that's going to look like 5 years from now.
Yeah, no, that makes a lot of sense. And let me ask you to take it maybe one step further in terms of aggressive growth plans and being able to execute on these plans, given all the challenges in the supply chain that folks are dealing with. I guess maybe not so much on the equipment side anymore. I think that sort of looks better, but certainly on labor and permitting, that still is an issue. What about access to commercial banks? I mean, luckily, CoBank, we're in a little bit of a unique position where we're kind of insulated from a lot of this credit tightening that we're seeing going on out there. To what extent, for those seeking loans from commercial banks to execute on their business plan, where we've got a higher interest rate environment and banks just generally tightening their credit standards, how does that all sort of work into this discussion?
We saw that play out kind of in the spring, right, with Silicon Valley banks, some regional banks, et cetera, that are depository banks that rely on that capital to have available to lend. So CoBank is insulated in that respect because our capital is based on our shareholder stock rather than deposit accounts. And so that's been helpful to us. We do see there are certain long-time reputable commercial banks that continue to be very active in the industry. But if you've been a little bit more of a fringe player or just coming into the industry, or your liquidity, your capital is challenged because of the environment, that does make it a little bit more difficult. So we've seen some downward pressure on structures, on covenants, on leverage, and frankly, a willingness for some of those banks to continue to play in the market. At CoBank, you're exactly right. We don't face those issues. We're a very careful steward of how we manage our capital, but we're in a really good place right now to be able to continue to be active in the communications industry.
That's certainly good news. That's great. Well, look here, Lennie, we've covered a lot of great stuff. This has been incredibly helpful for me and hopefully for listeners as well to learn a little bit more about what's going on in rural broadband financing. But before we wrap it up, I just want to give you an opportunity to, share any thoughts or comments on things that we didn't talk about that you think we should.
No, I think that covers a wide gamut of topics and probably some of the key factors that industry participants are looking at as they make their business decisions. But as always here at CoBank, if people have specific questions or business plans that they want to talk about or discuss, we're happy to have those conversations.
Great. Excellent. Well, Lennie, thanks again for being here. This was a lot of fun, and I appreciate you making time for us today.
Yeah, Jeff, thanks for the invitation. I enjoyed it as well.
A special thanks goes out to Lennie for being on the podcast today. There is a clear acknowledgement from private investors and the federal government that broadband access for all Americans is not a nice to have, it's a must have. That makes for a very exciting time in the rural broadband industry, given the unprecedented amount of money that is being directed towards it. But it does come with challenges and risks that operators need to be aware of. Hey, thanks for joining me today, and watch out for the next episode of the All Day Digital Podcast.
The information provided in this podcast is not intended to be investment, tax, or legal advice and should not be relied upon by listeners for such purposes. The information contained in this podcast has been compiled from what CoBank regards as reliable sources. However, CoBank does not make any representation or warranty regarding the content and disclaims any responsibility for the information, materials, third-party opinions, and data included in this podcast. In no event will CoBank be liable for any decision made or actions taken by any person or persons relying on the information contained in this podcast.